Maureen.
Hey, what's going on? How are you?
This
bad,
is a
not too
risk
bad,
disclaimer.
Just one second,
Trading
setting up
any
the YouTube
financial
screen.
instrument involves a risk of capital loss. This stream is only for educational purposes and not investment advice. So try not to fuck it up. Past performance is not indicative of future results, and personal results in general are difficult to replicate. If you decide to watch, follow, and you screw up, you can only blame yourself. And now, click on the like and subscribe button. Thank you for watching.
Good morning. How is everyone? We have... There's only two of us more in this morning.
I'm sure they are going to join soon.
Yeah, we just had the morning briefing, so probably people are confused, like, oh, we have another meeting or what? Let me just share my screen. Okay, can you see my screen?
Yes, I can.
Beautiful. Gold is pushing up, it looks like. So, these are the positions I have open, but we went through already on the morning briefing. Have you attended the morning briefing?
Yes, I did. I was in the morning briefing, and I watched the whole thing.
Ah, cool. So you familiar with the setups and everything?
Yes, I am. I'm also in the same trade as you are.
Which one, gold or?
Gold.
Ah, nice. Did you enter last Friday or just today?
I entered last Friday.
You're the man.
Yes.
You. Winning and losing together. That's what I like. Shoulder to shoulder.
Yes. So I am in profit already, and I've entered positions, and I've moved my stop loss on some of them so that I've locked in profit.
Awesome. You're doing well. Hopefully it's going to take out 1808 today.
I'm gonna type. So I think you're on. I think you're on Zoom, right? I mean, I'm sorry. I think you're on YouTube, right?
Yeah, Zoom and YouTube. Yeah. So do not share your PIN number or anything.
No, I'm not. I think I'm gonna type something. Let me see. Where's Zoom?
Yeah, you can message me on Zoom or yeah.
Okay, I'll do Telegram that way.
Okay.
Because I just want to see your reaction.
Is it about the thing we discussed last week?
It's partly, but
what? in like a proper currency?
Yes, real account.
Are you shitting me?
No, I am not.
Wow. That's unbelievable. Fucking hell, you're a big player. I wasn't expecting
I don't know
this.
about that. No, I know.
Wow, congratulations. Wow, I'm really happy for you.
I'm going to send you a screenshot of my current, just so you can see it. I don't want to like.
Wow, you made my whole year, but literally it's 31st of January, and you send me this message. Wow, congratulations, mate. It's probably the biggest ever amount I ever saw someone made in the group.
Oh, really?
Yeah. I mean, there's one guy who's managing 1.8 million euros. He never talks in the chat. He's really to himself, but he's using algos. There's another guy who does 1.6 million sterling, and the rest is below, well below. The average is about 1,000. We have 23 funded traders, so they're managing. The least is 10,000. The bigger is I think $400,000. Wow.
So don't get shocked about the picture that I'm sending you, but the blue that I'm about to send is the one that I entered on Friday.
Yeah.
So I sent you 2 pictures.
Yeah. At least you can afford to buy a new phone.
That's right.
Oh man. Wow.
Yes. My phone is cracked.
If you come and visit me, you paying for dinner.
I think I was a little upset about one of the trades and I punched the phone or something. I don't know.
Yeah. But it's excellent result. But how long you been trading, by the way?
So on and off 5 years. So I started maybe 5 years ago with a US account, Oanda.
Yeah.
And they don't do gold.
They do gold.
They don't do gold for US accounts.
Ah, okay. Because I had British account I started with Oanda 10 years ago.
Yeah, I mean they're awesome. They're a really good company. I think they were good to me. So we started with EURUSD and Kiwis and things like that. But then I wanted to trade gold and US30 and some of these exotic, and especially I started trading gold during the crash of the oil last year at the beginning of COVID.
Yeah.
I wish I had gotten into oil, but I didn't.
But so many people got burnt on the crash of oil because they started buying at $0 and it went into negative, which no one was expecting. It was unprecedented.
Yeah. So that's when I started. But I have been trading more consistently since COVID because I do real estate projects. And COVID has slowed that down a little bit, even though real estate market has spiked the value. But COVID has slowed down my side of the business. So I started trading more.
Of course, you have time to trade.
Yeah.
Wow. It's impressive. So just tell me one thing. Are you in net profit or net loss?
I am in net profit, yes.
Okay. Okay, because I've seen, big payouts, big accounts, but when I asked them, so in the long run, are you in profit or loss?
No, I am. Yeah, I know. I am definitely in net profit, and I think I've made double that. And I'm double that profit.
Wow.
But this month has been the biggest month. So and now you understand why they're restricting my account.
Yeah, but be careful because it's where are you based?
I'm based out of Washington DC, US.
Yeah, so you're using an offshore broker. So,
I am.
Which for me, IC markets and some of even the British brokers are considered offshore to me because they are not part of the European Union. But the broker you with is, I haven't heard about them, which doesn't mean they're bad. But if they already start restricting your account, you might want to look into the possibility of changing or withdrawing.
Yeah,
Don't want to
that's
scare you. I don't want to scare you, but obviously, if you're a big whale for a small broker, that can break them, and they're afraid. So you have to consider that.
yeah. Yeah, I'm making a withdrawal on Monday. That's tomorrow for me.
Yeah. And you're gonna go on a nice long holiday?
No, I have an annual goal that I want to hit. So so this year is gonna be to see if I can
Wow.
break some brokers or not.
What's your secret? What works for you? Tell me.
I
Maybe it can help
honestly,
for others.
I think it's just luck, but I do pay attention to divergence a lot. I trade smaller time frames. I don't usually stay in trades more than a couple of hours. I try to target $5, $10 on a big lot, and I'm out. And usually, if I make 1 or 2 wins a day, I'm done for the day. So I'm not into swings. I'm not into swing trading and a lot of those things.
Yeah.
So
in
yeah.
and out. In and out.
In
Take
and out.
your money and yeah, that's the in current market condition. It's probably the wisest you can do.
Yeah.
Wow. Really, really congratulations, mate.
Thanks, boss.
Do you wanna know what was the largest account I ever managed?
Sure.
$600 million. That wasn't my money. I have to put. It wasn't my money. It was the company's money, the hedge fund I worked for, and it was fixed income. So, fixed income, U.S. Bonds. Pretty much, we purchased the bonds, and then we had nothing to do for months. Obviously, we had to hedge it if there was any interest volatility. We had to hedge, protect the portfolio, and we were the kind of the treasury for the investment banking department. But yeah, $600 million. It's crazy amount.
Yeah.
But smaller, even I admit that my account is way below than yours. So it's definitely takes a man to manage this much.
Well, I mean, my thing is that I'm comfortable because it's my account, it's my money, it's not someone else's. So I'm not worried about losing it or losing sleep over. And so I'm just going with the flow, I guess.
Yeah, but was it always like this when you started?
No.
When did the time come when you break through or break even?
Funny enough, it was actually I was on vacation in a country that has the same time zone as London. I was in Morocco on vacation. And I realized that London time is probably the best time to trade compared to waking up at 8 o'clock in the morning in the US, and then either the trade has already gone or something, I missed it. And
you have those nice reversals on the New York session.
Yeah, but I'm not used to trading the reversals as much because the issue that I had at the beginning was I couldn't figure out where to put my stop loss on a reversal. And that's probably the reason why I got into the habit of scalping versus because I would take my profit very, very quickly. Yeah. So if I wasn't in this Zoom call, I would have already taken profit on the blue lines that you saw. But because I'm in this Zoom and I am trading as a team and things like that, I'm a little bit more comfortable, but I will still move my stop loss quicker, but I would still stay in a little longer. So even if it comes back, I might make, $1 or $2 on gold versus the $4 or $5 that I would look at. But if I'm really lucky, then I'll make the $7 to $10 moves and then I'll get out.
Yeah, I mean, you're protecting your capital, which is excellent. Is it your background music?
Yes, that at night we put.
It's really
that is my
exotic.
background. Yeah, it's Arabic actually.
Yeah, I noticed the sound. It's not calling to pray, is it?
No,
It's just a song.
Yeah, it's a Quranic reading, but it's soothing. Like
Is mesmerizing.
I don't speak it. I don't read Arabic, but it's cool.
Yeah, I like Arabic culture. It's I found it mesmerizing sometimes. I had friends in Iran, Iraq, Algeria, North Africa, Dubai, so all over the world. I know people. I wouldn't say best friends, but yeah, it's a wonderful culture. Pros and cons, like in every religion, but the Arabic culture, which I really admire. The food, it's wonderful.
I'm married to an Arab. My wife is Moroccan, so.
You lucky fucker.
Yeah.
That's nice. Okay. I'm just gonna grab a coffee, but do not leave because I have some important questions, which hopefully are going to help to other people in the team. Because obviously, I've seen your results. We had a personal conversation. So, any tips and tricks you may want to pass on to the younger generation, it's highly welcome. I'm just gonna make a quick coffee. I'm back in a second.
No problem.
Okay, I had my espresso fix. So, first of all, did I ever mispronounce your name? Morin.
It's actually Marwan, M-A-R number 1.
Marwan. I do apologize.
No worries.
I got used to it because people keep mispronouncing my name. But yeah, so you've been trading for 5 years, and obviously with a sizable account. What advice would you give to traders with smaller account or people who are not consistent in profits? What is the top 3 tips or whatever you think you might worth to share?
That's a good question. I think the biggest thing that I picked up is that the market is a probabilities game.
Indeed.
So as long as you are able to stay in the game, or the longer you're able to stay in the game, the higher probabilities you have at winning, or at winning consistently. So that's the first thing. The second thing is that when you manage your risk to reward ratio properly, you can have 2 times more losing trades and still be a profitable trader.
Risk
I
management.
noticed that as well. So if I sent you a screenshot. If I've entered really small position compared to my account size at the beginning because I wasn't sure, but I gave myself a very, very big stop loss. But I would still go against the trend. Not that I'm recommending anybody to do that, but I would go against the trend for only a couple of dollar moves. If I see a setup that I'm comfortable with, like, divergence, out of support, out of resistance, with the stochastic or the RSI overextended and it's pulling back, those kinds of strategies that everybody's familiar with. But as soon as I am profitable, I will move my stop loss, so I will take profit. And I would do that on a bigger lot or a bigger position, because I understand that I want to still remain in the game tomorrow instead of being wiped out today, so to speak. And I think that brokers, at least what I've noticed, I think that brokers are very, very slick in the sense that they would always prefer a smaller account versus a bigger account when you are trading at the maximum leverage that you can. So what I have done, for example, I have 2 accounts with my broker, and I can move funds in between the accounts. So when I enter a trade, but I'm certain that it's going to go my way, I will enter a big position in my regular account. But if I'm hitting my margin, or if I'm going to get a margin call or something along those lines, I will move funds so that the brokers doesn't close me out, and then let the trade run.
If I understand, you managing 2 accounts.
I am managing 2 accounts, and because I'm able to manage 2 accounts, every time I make a substantial amount of profit, I move some of the funds into the other account that I do not trade. I don't even know my MT5 password, let alone to be able to trade that other account. It's only like a reserve account, because I understand that broker has a system where they are not holding the funds. It's an actual bank that holds the funds. And therefore, even if they're wiped out, whatever account that you're not trading is not going to get affected by the wipeouts, like the stories of the 1990s and the early 20s, where the Swiss franc wiped out a bunch of brokers. In this scenario, this wouldn't happen to me because my second account is with an actual bank. So I manage 2 accounts. So now the account that I trade, I will move funds maybe once a week or maybe once a month. And this being the end of the month would be when I'm usually getting ready to move funds. If I've made a profitable month, move funds into the other account, or move funds completely out of the broker's account into my own account in the US.
Yeah, I mean, obviously you have different regulations, and it's a whole different marketplace in the US. Just going back to what you said about how you trade, you're not using any holy grail, just using simple things which work as effective as any other strategy out there. But I think if I understand correctly, your unique edge on the market is that you trade like everyone else, but as soon as you're in profit, you close it down and you're out.
Yeah. As soon as I'm in profit, I either move my stop loss or I close it out. I don't let my accounts go into a drawdown 2 or 3 or 4 times. I don't do that. So if I enter a trade, my account goes on a drawdown, it goes back to positive, it goes maybe to another drawdown, it goes into positive again, I'll move my stop loss. So if I get kicked out, I'm out of the trade. But if I'm not kicked out, then I'll let the trade run. But I will take my profit at $4 or $5 move on gold.
That's looking at the positions. the lot sizes on the first screen you send me, it's tiny compared to the account. And this second one is more substantial, but still, I would say reasonable.
And
$4
the other
to
thing
$5, sorry, $4 to $5 move is a huge amount of money. That's
and the other thing I do is I add to the winners. So if you saw on the second one, I have 1, 2, 3, 4, 5 stacked up with only 50 cents or $1 difference.
Yeah, but that's really, really close. But what I noticed, and this is my weakness, every single time when I have a nice swing trade, starts to go, and I try to add positions right at the retracements. And I noticed that about 70% of the time I got wiped out. Even though the entry is perfect, I have 4 confirmations. But yours is literally as soon as it goes into your direction, you just keep stacking up.
Yeah, as soon as it goes into my favor, I start stacking, and I start moving stop loss. So that so suppose I'm risking, say, 5% of my account on a trade. It's every single trade that I'm entering is risking that 5% when the other one is already protected.
So it's kind of like you have a cushion, safety cushion with the winners.
Exactly.
I just have a question for you on YouTube. Divergence on which time frame would you concentrate on, and what % would you risk or aim for? Thanks. Sent by H.
So because I'm only in trades less than, say, 15, 30 minutes, I look at even 30-second candles.
Wow.
So I will look at, so on my chart, for example, what I'm looking at right now is I have a 30-second chart on my screen with a VWAP, a 2 moving averages, and then
Sorry, do you have a screen you can share? Maybe.
Yeah, sure.
I was thinking, like, we have a top trader in our group.
I don't know if I will.
Who's willing to share his secrets, the way to success. Maybe you can buy a Lamborghini now for sure. But this is something people are excited about you. They're looking up to you now. You're getting definitely more questions than I ever got in YouTube. So and I'm interested as well. Maybe I can learn 1 or 2 things from you.
I don't know about that, but okay. So can I share my screen?
Yeah, sure.
I've just joined in this. I've kind of missed what was going on.
We have I don't want to spoil or anything, but I'm in discussion with Marwan for quite a few weeks. How long you been member? Since
2 months.
2 months. Yeah, but
so.
people keep surprising me about how they trade, what they work, what stage problems they're going through, and I had some positive surprise from Marwan. He's definitely a good trader. I can see the results, and we just got into the discussion about he's sharing his secret strategy with everyone.
Okay, cool.
I'm just trying to share the.
Are you able to see my screen?
Yeah, just 1 second. No, hold on, just 1 sec.
Yes.
1 sec.
Yes.
Zoom. Just trying to share it. Just hold on for a second. Okay. Yes. Please go ahead.
So some of these things are, there's nothing in here that's not on free on TradingView. So I look at all of the time frames, and you can see the time frame that I focus on. So I look at the monthly, the weekly, 2 days, daily, 12-hour, 8-hour. But most of the ones that I trade are in this space right here. But when I do enter a trade, I go into a 30-second to make sure that I am not on the wrong side of the VWAP. And then I also put some of these moving average on. So for example, if this candle breaks my VWAP and the moving average, then I will not be on a long anymore. Or if I see a divergence on the bottom, for example, a bull divergence on the bottom, even if I don't have confirmation, I will buy and put my stop loss a couple of dollars below. Or if I see a divergence on the top, I will sell and put my stop loss a couple of dollars above. But because I'm so quick at moving my stop loss, it doesn't always work, but it does give me that $1 or $2 protection for me to move my stop loss, so that even if it comes back and hits it, I haven't lost anything, or if I have lost something, it's not substantial. So I do look at the stochastic RSI combo, and I have my 50 line in the middle, and I also have a 50 line in the middle of my divergence. So I try to look for sales on a higher time frame. I look at a sell when the divergence is below the 50, and I look at a buy when the divergence is above the 50. So it's the same thing that a lot of people, do online and things of that nature. I don't necessarily try to look for a sell or a buy just because I'm overextended on one side or the other, but I do look for the divergence when I'm overextended on one side or the other.
So you trade what you see and not what you think.
Exactly.
And can I just ask, can you tell the audience that how much is the average risk and the average profit you take, and not considering your account size? I want to see I want to hear percentage, so people understand that this, in the long term, to survive, you have to, be smart with the risk management. And because you're a successful trader, what is your average win per trade? How many percent?
My average win is more than 60%. And
no, I mean in the position size compared to your account. So let's say you have a $10,000 position you just closed down. That's about less than 1%, right?
Yeah.
And people aiming for, doubling their accounts, making 400%, unrealistic expectations in trading.
I mean, so I think my strategy is to try to be profitable consistently every single day. Even if it's $1 or $10,000 or whatever, is to try to make sure that today I can say I closed today with a profit versus a loss. And that's the reason why I'm so quick at moving my stop loss. But I do try to aim, regardless of what position size I put, I try to catch a specific dollar amount on the move in gold. So and my number is 4. So every single day, the goal is to try to catch a $4 move on XAUUSD. And it doesn't seem like a lot, but once you start to break down the numbers, it can really blow your mind. So if you do a $4 move on one lot, it might not be a lot, but if you do a $4 move on 100 lot, now you're talking, $40,000. So if you do 4 lots, or if you do $4 on, say 400 lots, it's hundreds of thousands of dollars kind of thing.
Yeah, I mean, the bigger the lot, the bigger the risk is, but you know, you're literally in and out of trades, so that reduces the opportunity to lose more and also to win more, but you're aiming for a reasonable return.
Yeah.
It's wonderful. Now, how do you use the VWAP, the volume weighted average?
So I just want to be in the trade. I just want to be on the opposite. So the VWAP that I have is Belkhayat VWAP. And the cool thing about it is it changes colors when the trend changes. So as long as the things above, you have a green. When the things below, you know, the candlesticks are below, you have the red. And then when it's kind of neutral, you have the white. So if I'm in a trade, the VWAP kind of reassures me that I'm in the right direction as long as the color hasn't changed in the opposite of my trade. So if I am bullish, even though there's candles that are red, signifying chance of pushing down, I would still be comfortable as long as the VWAP is green if I'm buying until I get my $4 move. Especially if I entered right here. For example, some of the pictures I sent you, I entered some extra positions right here. And then this bullish candle happened. So then I moved my stop loss at break even or a little bit above break even. But I will stay in that trade until the VWAP changes red or white and or whenever it hits my stop loss. And if it keeps going higher, I will move my stop loss to follow kind of the candles.
Is it an automated trailing stop?
Right now I'm doing it by hand because I cracked my laptop, but I do have an automated stop loss that would follow.
Yeah.
I cracked my phone and my laptop.
Yeah. I'm sure you can afford now to buy a new phone. But yeah, so if you had to break down your strategy into rules, simple rules to follow, how would you define it?
So the way I would define it is probably the first thing I would look for is the divergence. That's the first thing I would look for. And then I will look for the support and the resistance within that area. Then I will enter the trade and then manage the trade on the based on the VWAP. That's the way I would do
That's it.
That's it.
That's it. Simple and clean. I like it.
Yeah. That's pretty much it. So for example, here, I've seen you trade and you would feel comfortable leaving your trade go, even if it's making a lower low because you have your stop loss, you have your trade plan, it's all set. But if this makes a lower low than this, I would definitely get out of the trade. Even if I make a dollar, I would just get out of the trade. So I think last time, I think I was in Boston when I last spoke on your channel. Where I happened to show up naked on your YouTube. Yeah. But I entered the opposite of your trade and I only took $4 move and then I was done for the day.
Yeah, that probably was someone's annual salary you just made on that day.
Yes.
Unbelievable.
R1. About how much trade plays per day?
2 or 3 trades, and usually I do it between 8 o'clock and 9 o'clock in the morning.
Okay.
What time? You British or?
8 or 9 o'clock New York time.
Okay.
Impressive strategy.
Yeah, it's I mean, I try to dumb it down, you know. I try to dumb it down because of the divergence up here, I was really looking for sales, but everybody on YouTube, everybody was talking about going to 1870 and higher, and we've entered a bull market. I was really trying, but even I'm influenced by what's happening out there. I pay attention to what people are talking about, what people are doing on all of the social media and things like that, because I want to know what
feel
side
of the
of
market.
Yes, feel the market, exactly. Thank you. So when everybody was so bullish on the market, I did not enter a trade. And what I did was enter really small positions, every $1 down for 10 positions, just to see where the bottom would be. And it still went down like $10 or $15 lower than my entries. But I put my stop loss at 1777 is where I put my stop loss. So those trades are still going, they're still negative. But I've entered a bunch of trades on the bottom to make up for all of the losses that I would have had, even if I closed those trades. So now I'm just waiting to see if it's going to hit my stop loss or if it's going to go back. Yeah, that's pretty much it.
Thank you so much. So just it's unbelievable. You know, most people over mystify trading, but at the end of the day, it's not that difficult. It just do what you feel to do and have reasonable expectations. Find a strategy that you can execute over and over again.
Oh, one last thing. I don't trade on Fridays usually, unless I see something or maybe you send a signal. But I usually don't trade on Fridays, and I don't trade last days of the month as well. And I try not to trade news. I try really hard not to. I've gotten my account wiped twice by trading news, so I try not to trade news.
That doesn't sound like good risk management to me, but yeah, we all been there, so it would, you know, it would be stupid to say, you know, it's not good. I've been there as well ages ago.
Yeah, I mean, I at one point or another I was a newbie, so you know, I've wiped accounts on Fed meetings. I've wiped accounts on. I've wiped an account on election. Hillary Clinton, I've wiped an account. I wiped an account on Donald Trump. So yeah.
Well, I wish it's not going to happen again on the account you just showed me, because that would be a shame.
No, they were smaller accounts. They were just really small accounts. But it was the learning process. What can I say?
Yeah, everyone starts like that, but it's the same as when you get into a relationship with someone and things doesn't work out the way you would expect. But when you go into counseling, the directed questions from the coach or psychologist or whatever helps you to stop for a second, observe your surrounding, observe the situation, the way you react to certain things. Because, for example, people express love in different ways. Somebody gives gift, money, some others like to hug, you know, all kind of things. But sometimes people don't match. But when you can realize the differences, and when you can recognize yourself, the things that you do in life and in trading, you recognize the mistakes that you do over and over again, and you're not learning because you think you're smarter. Especially true for men. I don't like to work with male traders because 90% of men have fucking big ego, such as myself, and it's difficult to overcome this. But once you realize your surroundings, once you realize your emotions, and you learn about yourself, trading becomes much easier. It's an interesting game, but this is one of the aspects.
Sure. That's why psychology is so important.
Yeah, it is very important. We had to do annually. We had to go on an evaluation to the corporate the company psychologist. So it was a psychologist in Bank London. We had to go every 6 months to do a couple of sessions, and we had really strict rules. So we had to go to the psychologist, talk. You know, some people got burnt out because of the job. Well, my job wasn't on the fixed income desk, wasn't too exciting because we were investing, you know, 600 million in fixed income bonds. Yes, we had some stressful periods, but when I was on the stock as an execution trader and I made a mistake, now that's when I started losing my hair. That was more exciting and more stressful. So we had to go to a psychologist, we had to take mandatory breaks annually, we had to give back the company phone, the laptop. They wiped all the access to any capital markets or any company chat. So they just asked us to disappear for 2 weeks. Do not log into any company platform. Exactly because of the psychology.
Oh.
But people, when I look at retail traders, I don't like to post setups and trades every single day. But the problem is, since I started doing alpha FX, people expect, you know, they open up Discord and like, oh, I'm gonna look at the trades what Thomas posted, and they expect to have, you know, the perfect entries and you know, trade every day. But the reality in trading, if you look at my trades, even them they're not 100% wins, some of them are really shitty trades, but I'm not confident. But I only take the best trades. Yes, I do lose sometimes, but you know, losses are built into this game. There's no way around. You can go around losses. You have to accept reality. And as Maran explained, until even you can be 7%, you can have 70% losses, and there's a law called the Pareto law. Maybe you're familiar with the 80-90, the 80-20% rule. Even if you have 80% of your losses, that those 20%, if you can catch the right moment of a nice, you know, gold is melting or skyrocketing, it can pay the losses from the 80%, and that's, you know, probability game. What's the time? 10:18. How many people? We have 10 people in the Zoom. It's not a big turnout, but I think everyone's working.
Yeah, I was just listening into all that. The psychology is such a big thing.
Yeah, I mean, most people have such unrealistic expectations about trading, and they don't respect the money, because, you know, when you make money or $1 or $10 or £10 on a $100 account, you know, it feels nothing. You want more, but if you add up, as Moran just explained, you know, in the long term, you will see huge growth on the account. And, you know, if you take into account the compounding effect as well, it's easy to grow even a small account, but it takes years to master. And, you know, I wouldn't say it's easy, but if you crack the psychology part, then it becomes easy. When you can say, okay, I made 10-20% of my account, I'm just gonna walk away, come back tomorrow, make the same amount, and then the day after and the day after, you know, 1 month, and, you know, you're going to see some real increase in capital.
Yeah, absolutely. It's happened so many times where I'll make more than what I targeted to make, but then you get too greedy and you'll put another trade on and you'll just end up losing everything that you've just gained, and it's just ridiculous.
Thomas, can I share exactly what you're talking about on an Excel sheet? I want to show you something that I've been working on that
sure.
I think you might like this. Let me know when you are able to let me share the screen.
Is it not on?
No, not anymore.
Not yet. No.
If I stop sharing, now you can.
Okay. So let me go and share my screen. So I have this 3% rule Excel sheet. So I did the math already. So if I have an account that has $50,000 and I am looking to make 3% and risk 1% in 240 winning consecutive trades, 240 consecutive winning trades.
That's 240 days.
Yes, 240 days. So I will have, so here, 240 trades. I will have $58 million in my account, starting with $50,000.
Yeah.
So if you can enter 240 winning trades, targeting 3%, and you make 3% on every single one of those trades. So this is, if I make 50, if I have a $50,000 account, 3% is 1,500. So when I reach, say, $158,000, 3% is still $5,000.
Yeah.
But if the winning is consistent within a span of 240 trades, my account will grow from $50,000 to $58 million.
Yeah, and realistically, it looks wonderful, and you know it's exactly the kind of promotional material Daniel Savage and all those guys would use. But realistically, you're not aiming for. I had a quick oops, sorry. So I had a quick
Should I put it back?
calculation. No, it's fine. I'm going to put back my MetaTrader, but realistically, calculating, you're not even making 1% on your account. You're making a tenth of the 1% on your current account, but realistically, no one is going to make 240 wins in a year. That's 240 trading days. Means every single day, people should be able to make 3%, but it's unrealistic, isn't it?
Well, it's pretty difficult.
Okay. Let me show you something. I just need to look up. But keep the discussion. I'm looking for something to show you.
Yeah. 240 winning days is yeah, very, very difficult.
But you do realize that there are strategies out there that are 50% or 60% winning strategies, I think. So I'm not saying that all of them are always going to work out, but 50% of them might, out of say 200 or 500 trades. So if you find one of those strategies and they've been tested 500 times and they have a 50% winning ratio, it is possible for you to get 240 winning trades. But at that point, you just have to make sure that your winning percentage is a little bit more than 3%. When you're risking,
what's the problem with this? I
haven't found that one yet.
Yeah, one of them is like, introduce me to that strategy that works 60-70%. The other thing is that the more you trade, that percentage is going to decrease. The more you on the market, if you really stick to one trade per day, I think it's reasonable to expect even 70%, but you have to really give time to analyze, and when you have to be really selective with your trades and you allow it only 1, 2, maximum 3 trades, that's when the strategy works. But when you throwing trades like an idiot, like most day traders and retail traders and all of us did at one point in our life, that number, that 70 or 60 or 50% winning rate is going down with every single minute you spend on the market, in my opinion.
Mm-hmm. Yeah,
I agree. Absolutely.
That's why I think the funded programs are exceptionally good in teaching people risk management and you know. Okay.
Thomas, quick question. Do you get overconfident at times when you win a lot of trades?
Oh yeah, every single day I'm overconfident. Without the joke. No, sometimes when I burn myself, my ego goes down. Sometimes I'm overconfident, and this is it's not a coming out, or you know, it's human nature. We get overconfident in our life with many things. You know, you think your body looks good. You think that your trade is going to make you a millionaire because you start. Imagine when you started trading. How many of you wanted to quit your job on the first week as you started trading, or the first month? I know exactly you wanted, because you told me. Because people get overconfident. Okay, I'm just looking for something from 2015, Goldman Sachs. Let me just see. I wanted to show you. Anyway, I will try to find it. But actually there's a really good report which most of the investment banks have to submit. And in case of Goldman Sachs, it's called the 10K filing, where it shows how many losing and how many winning days the Goldman Sachs trader have. And we're talking about you know, the best traders in the world. So if I can find it, or you know what, I have a video about that. I made a video ages ago about Goldman Sachs traders. The truth about market makers. So there is a form which is called the 10K form. You can access it via Google. It's a public report which Goldman Sachs is not required to submit, and I think they stopped after 2020 or 2019. But for decades they created this report where they, you know, it's like an annual statement, like similar to a financial statement, balance sheet, you know, all that information which investors, managers are looking at. And every single 10K form, on the 91st or the 90th, somewhere around that page, depending on the size of the document each year, there is a chart which is a frequency distribution of daily net revenues for positions included at the value at risk for 2018. And this is from, let me just show you. Anyway, this chart represents the trading income. So it's not the investment banking, this is pure trading. And on the chart I collected 2018 to 2013 to 2018, and you can see the frequency distribution. And you know, this is just a histogram or bell curve. If you're not familiar with bell curve, you can draw, it's like a bell shape. And right in the middle, you can draw a line, and anything to the left is considered as a loss, anything to the right is considered as a win. And you can see the numbers going from 0 to 100, 0 to minus 100. And this is the average of how many $1 million they made on one single day. You can see on the bell curve that, which is, if you're talking about the numbers on the right, on average Goldman Sachs traders made 64 days in 2018 between 0 to $25 million. And if you go to the very right of the curve, on average 22 trading days they made 75 to $100 million. Anything to the left is a loss. So you can see that on average they make more profit than losses, and this is perfectly represents the weight and the distribution of why are they winning traders. Obviously they have huge amount of market data because they are prime brokers, so most of the hedge funds are linked in and connected to Goldman Sachs, so they have market data which they use it as an advantage. But you can see that on average Goldman Sachs traders, who are the finest in the trading world, were winning 220 days, and they had 30 losing days. Yeah, this is the statistical number of how many percent they win. It's pretty impressive, right?
Yeah, it's crazy.
But these guys have access to data that you would never imagine. These guys are, you know, they have the finest pedigree in the world. And they've been doing it for 150 years, since the inception of Goldman Sachs. And you guys are against these guys.
Not a very level playing field, is it?
No, but if you think logically, if you switch the amount, I mean, if you look at the number, 85% of the time they were right, they won in 2018. Whereas if you look at the retail broker data, on average 85% of the traders are losing their whole account within the first month. That's exactly the number. There's no secret. They following, you know, some of the traders using only technical analysis, only chart reading, some of them using algorithms in Goldman Sachs. But the key is that even if they have 30 losing, even if they had 50-50%, they would be still in profit. But in retail trading, most of the people, they over leverage the account, takes on too much risk, and that's why they're losing in the long term. Because 1, 2, even 10 losing trading days should not affect your overall capital. Imagine that Goldman Sachs have 30 trading days in a row losing. Would they close down the bank? No. Absolutely not.
Yeah.
Anyway, that was my fun fact of the day.
I remember watching that video. It was really interesting.
Yeah, it was one of the really, really first videos I was creating.
Just couldn't believe the numbers when I watched that.
Yeah, but you know, they have access to data. Do you know how the Forex market and any market builds up? We have brokers, IC markets, you know, whatever broker you use. But Goldman Sachs, Morgan Stanley, JP Morgan, they are prime brokers, meaning that they are market makers. So by the SEC or any market regulator, they are mandated, they volunteered to make market, meaning that if there is no liquidity on the market, they would be still there to provide price quotation, especially true for the stock market and ETFs. So if nobody wants to sell, nobody wants to buy, but you have stocks you want to sell in bulk, they have to accept it, and they have to make even if they make a loss, they have to execute your order. This is what market making is about. Without market makers, there would be no market. Now, on the other hand, because they have such a huge exposure to the market, and they also provide prime brokerage services, meaning that they're giving access to capital markets. They give access to capital markets to hedge funds, to family businesses, to even to retail banks. They provide capital market access. And then we have the institutions, oil companies, drinks companies who need to hedge their financial exposure on the capital markets. So it's really versatile, the amount of players in capital markets, and you wouldn't imagine the kind of derivative contracts these guys are taking. The key point here is they have access to these clients. These clients execute orders via them, meaning that they have access, they know exactly the exposure of these clients. So if you have, for example, of the S&P 500, you're looking after just 50 of the biggest companies in the US, and you know exactly what positions they're taking, wouldn't it make trading easier?
Yeah, true.
Oh.
So the amount of data they have is just unreal.
Are there any, when you say market makers, and these are like the likes of Goldman Sachs and things, but is there such a thing as retail traders that are market makers that have got such large amounts of capital behind them?
But they're not market makers, because market makers is I wouldn't say it's a legal definition, if I understand your question correctly, but market maker is someone who's obliged to make market. Because if there is no market maker, there is no market. Meaning that if a stock is illiquid because it's only came to the stock market or whatever, but you really, really want to sell it, but no one's there to sell, what you gonna do? And that's exactly when they came up with this terminology decades ago, that we need someone to make market. And that gives liquidity to the market, meaning that your order is not going to stuck in for weeks when you want to cash out. And this was one way to make the stock market more appealing to investors and not scaring them that your money could stuck in for months if there is no market and if you make the wrong decision. Then there was another thing, they wanted to make it more transparent and all sort of things. So that's why a retail trader could never be a market maker. Was this answer to your question?
Yeah, that makes sense.
Yeah, some markets, retail traders can move the markets with big capital. Even with a few $1,000s, they can move markets. But we're talking about such exotic markets. For example, if you look at in the universe of ETFs or even foreign currencies, there are some really exotic currencies which are virtually flat. There's no volatility. So if you imagine someone comes in with a reasonably big account and just starts placing order, that's going to move the market. But that's not a market maker. It's just simply someone's having capital and moves the market. Many stocks are the same. Perfect example. No liquidity. Someone comes in, starts to buy. An algorithm picks up that there's demand, and price suddenly goes up.
These trading algorithms that a lot of people use, these are can only sort of last for so long, can't they? Like, because when they don't really account for fundamentals and economic changes and things, do they? Because they're only going on.
Some of them do, and when I did my master's, this was one of the topics I incorporated in my work, which is how trading algorithms, it was only a small brief introduction, but how trading algorithms are used to pick up Twitter messages and pick up keywords from newspaper headlines like Financial Times and Bloomberg. And yes, some of the algorithms do consider fundamental news, but the only effective. But I did this research like 8 years ago, and it's purely on key terminology and keywords. Fundamental data, like qualitative data, you know what, you have to make a distinction between qualitative and quantitative. So if a data like an economic data release, would you consider as qualitative, like fundamental? You would, yes, and on other hand it's represented by a number, so it's qualitative as well. So algorithms can pick up changes in, look at the CPI. Any reading above 50% is, look at the PMI. Any reading above is considered, any reading above 50 considered expansion of the economy, therefore bullish for the dollar. Below 50, contractionary, bearish for the dollar. There's an algorithm for you. It's simple if, what if functions like in Excel.
Yeah.
So when you're talking about algorithms, you don't have to think about crazy, complex mathematical algorithms.
Interesting.
But sometimes, I used Night Owl by Morgan Stanley. So we traded with this algorithm on the ETF market. When we had a massive order, we bought the company. We were mandated by the company, the head office in Korea, to buy self-autonomous ETFs, self-driving car ETFs, which they thought it's going to be the new thing. But it was way too early back in 2016. Tesla was only just, opening its wings. So we purchased shitloads of this ETF, but it turns out it was a big mistake. And then a few months later, the CEO decided you need to get rid of these. Okay, but how the fuck are you getting rid of these if the market is flat? There's literally, Morgan Stanley said you're not allowed to sell these in bulk. So we had to use an algorithm which broke up the order into small chunks and just fed it to the market when there was demand.
All right. See, US 30s slowly going down.
Dropping down. Yeah, I'm in £600 profit, but let me just jump back on YouTube and maybe give a good signal to the YouTube viewers. Maybe they can buy the first Lamborghini.
And gold's kind of gone up but coming back down again now.
Yeah, it's, the market is going up and then down.
Yeah.
Did you enter into US 30?
No, not yet. I was a bit hesitant. I wanted to wait.
I was a bit premature and entered, but as I mentioned in the morning briefing, you have to be careful. But so far, this resistance is respected. But the problem is that it started moving sideways just below the resistance. It makes me a little bit uncomfortable. It's usually what happens if you watch the pre-breakout video on the website. Price starts to move sideways just below an important resistance level, and then usually just breaks through with a fucking bullish candle. But, probabilities.
Question, Thomas. Fundamental traders, right?
Mm-hmm.
How do they really enter the market? Just on fundamental news, or they use technical also?
So, can you repeat the question? So, do I use fundamental and technical, or?
No. I'm asking fundamental traders, do they enter the market based off technical analysis?
Of course, all of them. It's bullshit too. You cannot ignore the... I cannot speak of every trader, but most of the fundamental traders I know, for example, macro hedge funds who consider macroeconomic events, even they look into the market and look for entry points, because finding a good, you make your analysis, interest rate parity theory, perfect analysis, higher the interest rate in one country, the more demand it's going to be for the currency.
Yeah.
But you wouldn't just buy that currency when the interest rate decision comes out, because what if the market first sells off? You would want to have the best entry. Fundamental traders work exactly the same way. And I think even though if they say, yes, they do trade fundamentals, they do look at the technicals as well. There's a reason why charting is considered, a popular thing, yeah. So they do the analysis, but they look for entries on the chart.
The way they speak, it makes it seem like they just work with fundamental alone.
Yeah, but I think it depends on the trader. If they do fundamental analysis and they not look at the trade on the charts, maybe not. That would be, I think, would be too arrogant. Okay, so can you guys do me a favor, because there's only 60 viewers and I'm talking for 2 hours now. Can everyone jump in and just share the link to a group or friends or your grandmother or whoever, just to get more viewers, please?
YouTube, yeah.
Everyone is sleeping out here.
Sorry to do this to you, but I'm gonna go to sleep too. It's 5 o'clock in the morning over here.
It's okay. I'm gonna go as well. It's lunchtime in Budapest, so I'm gonna have a nice focaccia sandwich.
All right.
Nice. That sounds good.
And I made the focaccia last night.
Jeez.
Damn right.
Don't tell my other half that. She'll be expecting me to make focaccia now.
Yeah, the one thing I've learned when you're in a relationship or work, do not do the job perfectly, because then you will be expected to do it again. And I'm doing the same with cooking. Sometimes I deliberately burn the dish so I don't have to cook for a couple of weeks. Okay, guys.
Now that you've spilled your secret, your significant other knows.
Yeah, hopefully she's not watching. But see you guys at 1 p.m. UK time. We're going to do the same session. Chit chat, discussion, coffee, put some trades, proper traders day. Okay? See you later, 1 p.m.
Catch you later.
All right. Thank you, Thomas.
Thank you. Okay. People of YouTube, thank you so much for streaming in. If you enjoyed the morning discussion, please consider sharing my YouTube channel, subscribing. If you like the content, hit the like button. If you really liked it, subscribe and share the channel. I'm going to come back in 1 hour and 40 minutes. 2 hours and 40 minutes. I'm gonna go have a lunch and a coffee with some friends. See you later, okay? Thank you so much. Bye bye.